Good evening, everyone. Welcome back to the channel. So, for my 200th video in the history of the channel, which this is, I wanted to do something a little bit different and a little more special that will hopefully be what's considered evergreen content, at least for a year or so. So, what I want to talk about, we've had all this talk in 2022 of inflation and economic news and basically bad news for the stock market, for inflation and whatnot. But there's actually a silver lining to inflation for savers. And I'm going to talk about three particular tax advantaged accounts because basically, if you are a saver and an investor, and if you max out your tax advantage accounts, which I highly recommend, and most everything I discuss on this channel, I highly recommend maxing out the tax advantage accounts before you do anything else. And primarily, like I've talked about a lot, the 401k, one of the best things you can do for your long-term financial future is to max out your 401k, and that maximum amount is increasing which I'm going to show you. And I also recommend funding a Roth IRA on top of a 401k. Some of you may think that's overkill, but I think you can never overdo it. It's better to overdo it than to underdo it. And then the third one is actually called an HSA, a health savings account. And between those three, you can put away a lot of money. You can put away over $30,000 a year in tax advantaged savings, which I'm going to go into the benefits of this, which I've talked about before, but I'm not sure if I've ever dedicated an entire video to it. But basically, whatever you make, just say on average, say you make, 50, 60,000, maybe even 100,000, the contributions to these accounts basically shave right off of your taxable income, at least for the Roth IRA, not for the Roth, but for the 401k and the HSA. Now, for the Roth IRA, it's a little bit different. That money is money that has already been taxed that you then put into the Roth IRA. But then the good thing about it is whatever it grows to, you never pay tax on. So you avoid all capital gains tax, uh, everything basically that it grows to because you've paid the tax up front. So the Roth IRA is one of my personal favorite accounts. But let's go into the changes for the upcoming year 2023, which is only like 3 days away at this point. Hard to believe, I know. We're ending such an exciting, eventful year. So starting with the 401k. So last year, the 401k maximum contribution that you could contribute was $20,500, and now it's going up $2,000 to $22,500. So that's a nice increase in what you can put away, and that helps with your um, tax situation, like I've said, because if you get a raise or if you get a basically to keep up with inflation, which is like 9% this year, or do we even know? I think it's finally starting to come down. But if you get, say, you get a 9% raise indexed for inflation, then you would feel like, well, I got to pay more tax on that. But the good news is the tax advantaged accounts are increasing in their contribution limits, like I've said. So from the IRS's site directly, like you want to take it directly from the horse's mouth. So this is the source, the IRS's website. I know it's amazing. It's like they're finally doing something good. All you hear about in the news is like the $600 $600 like limits for reporting now, and then the 87,000 agents. But this is actually something good. So we'll focus on good news for today. Um, so yeah, the first thing, 401k, also 403b, and most 457 plans, and the federal government's thrift savings plan will increase to 22,500. So all those lump under the 401k bullet point here. And then the limit on annual contributions to an IRA are going to increase to 6,500 from 6,000. And then if you're over 50 years old, there's actually a catch-up contribution, which I can certainly tell you when I'm 50, I am going to take full advantage of this because in full disclosure, like I should have started a Roth IRA when I was like 18. I didn't actually start one until I was like 25 or 26, at least a separate one, because I had my first 401k. I actually had part of it in a Roth IRA, but then I realized the tax benefits for the traditional IRA. So then I started maxing the 401k out, which really accelerated the growth, which I highly recommend all of you do. Trust me, you'll be thankful you did down the road. You'll reap the benefits of it, especially in a bull market. Um, but like I said, for me, I will definitely be taking advantage of the age 50 and over catch up contribution when I get to that age because I missed probably a good 6 years of maxing out my Roth. So, and some of you probably wonder, well, how does a financial guru like you miss something like that? Well, I didn't always know what I know now. Like when I was 18, I didn't know 80% of what I know now. So, that's you learn with experience. Knowledge comes with experience. Okay, so and then thrift savings plan. We're not going to talk too much about that because that's not as common. And then there's other ones like the simple plan, phase out ranges. Really, there's three I want to talk about. I mean, you can read the IRS site yourself if you want to, but I want to go over, like I said, 401k, HSA, and Roth IRA. So 401k is increasing to 22,500, which is up from 20,500. The Roth is increasing to 6,500. The HSA is actually increasing to 3850 for individuals, which is up from 3650 in 2022. So that's only going up $200. And for family coverage, it's 7,300 this year, and it's actually increasing to 7750, I believe. So for families with with a joint HSA account, this can actually be another huge tax advantaged account that most people overlook because the thing is, it's a health savings account, but it's an investment at the same time. It's like an IRA for medical expenses. And once you get over 50, the money doesn't have to be spent on medical expenses. So while that's what the tax benefit is for health related expenses, I believe that it's in your best interest, everybody, that is serious about retiring and having as much money for retirement as they can. I believe it's in your best interest to also fund this account. And in full disclosure, 2022 was the first year I fully funded an HSA account. And I'll even throw this one out for you. It's the HSA is in two mutual funds actually with Fidelity. It's in the FNILX and then the FZROX, I believe, two of them, the Fidelity Zero large cap and the other one. And it was doing pretty good actually because I did it like in October when I started my new job, and I was up like 10% until the market started dropping again. But I believe it's still up because I got in at a good time actually. But yeah, in full disclosure, that's what mine is invested in. But like I've said, the rules on this one, there's no penalty if you use it on medical expenses if you're under 50. And let me look up. There's some different rules and stuff. Let me just look up uh, HSA penalties. Like I say, these accounts are all really good ways to minimize your tax burden as you get into higher tax brackets. So this says you'll pay federal tax on any HSA funds you take out to use for non-medical expenses. Plus, your state may take non-medical withdrawals if your state has income taxes, which most states do, unfortunately. If you're under 65 years of age, you'll pay a 20% penalty for any distributions you take out of your HSA for non-medical costs. So basically, this one, if you don't use it for medical costs and you just use it as kind of the backdoor retirement account that it can be, you've got to wait till you're 65 to avoid that penalty. But then again, because I've looked at for my first 401k from the job that I left in October, um, they penalize you on the 401k if you withdraw when you're over 60, which personally I'm not a fan of. And I say that, and this may be a little bit controversial, but I say I'm not a fan of that because I'm responsible with my money. And to me, if I withdraw the money before I'm like age 60, like that's on me. Like that's if I want to do that, like that's my own stupidity, if you want to call it that. But the reason those rules are in place, in my cynical opinion, is because most people are not disciplined enough to save money. The vast majority of society is not disciplined enough to save money. If you put the prospect of what's appealing today in front of them, that's what they're going to do. They're going to blow their money on what's appealing today, and they're not thinking about tomorrow. That's just, the world we live in, unfortunately. The vast majority of society is not going to save money unless they're forced to, and unless they're in an account that there's some kind of a penalty for withdrawing money. But for me, now here's my take. Even if you withdraw early, even if you incur the penalty, if that 401k has been in existence for years, for like 10, 15, 20 years, and it's grown and grown and grown, even with the 10% penalty, you're still going to come out fine. And personally, another full disclosure, I've taken a hard look at, like, what would it take if I was to say, like, retire temporarily for 6 months? Like, say I wanted to give YouTube a serious, like, full-time trial run. Like, say I'm just going to do this for 6 months, which I'm trying to not, like, I'm trying to do this on top of full-time work. Like, the idea is to get there while working so that when I do retire, it's already rolling. I don't want to have to quit work and then build up, from where I am now. But I did some serious thinking. If I was to do that, and I took the penalty, like, I could conceivably live off of the 401k for a handful of years at least, and still be okay because of what the account's grown to in previous years. Because luckily, over the last 5 to 10 years, we've had the benefit of the one of the greatest bull markets in U.S. history. So the penalty, the moral of the story is the penalty is not quite as bad as it seems. Now, what I want to go to here, I'm going to show in spreadsheet format. These were the 2022 limits between the 401k, the Roth IRA, and the HSA. So if you maxed all of these out, you would have socked away just over $30,000, $30,150 to be exact. In 2023, the 401k is going up 2,000. And we'll play a little game here. Are the increases keeping up with inflation, or are they not? Well, in the case of the 401k increase, that's about a 9.76% increase. So it might actually be slightly outpacing inflation, which is good news. The Roth IRA is about 8.33%, which may be slightly, if you judge by the, like, July CPI number of like 9.1%, which we've fallen from. This is just shy of that, and the HSA is not quite keeping up with inflation. And as we know, medical costs go up a lot faster than inflation typically. So if any account should have probably gotten a bigger increase, it should have been the HSA account. But I'm glad that we're getting what we're getting. It's about 2,700 total that we can, 2,700 more that we can put away in these tax advantaged accounts. And the 2022 limit is actually higher because going back only like 3 or 4 years ago, the 401k maximum was only like 18,000, I want to say. Let me look at let's see, 2018 401k maximum. I think it was like 18,000 if I'm not mistaken. Yeah, 18,000 actually in 2017. I think it goes up every year. And it's been going up more in the last couple of years. Uh, so yeah, in 2017 it was actually 18,000, and it went up to 18.5 in 2018. Now I want to look at what it was in 2016. I think 2016 was actually the first year I ever maxed mine out. Um, I think it stayed actually. I think it stayed at 18 for a while, for many, many years. And then they started increasing it by the time we got to uh, by the time we got to 2018. So that's good. Now I want to show tax. What was I trying to say? Oh, the other thing I want to discuss: marginal tax indexed for inflation, because this is another benefit we're getting. Um, so the concept of this is basically, and I believe this started like in the 80s, like with Reagan. This started. So when we have inflation, the income tax brackets are actually adjusted for inflation. So the marginal brackets, and I don't know if this can really be explained well in a visual, but this comes close here. What Market Watch has. So I'm going to pull up this chart. Um, And basically, so what they do, they index the tax brackets for inflation. So if you're in the highest tax bracket making over half a mil a year, which is probably not many of us, if any, because it's like a top 1% income or so, then basically it's indexed in basically reflecting a 7% rise accounting for inflation year over year. So you can see that the brackets are expanded pretty significantly, and it started in 2022, but in 2023 they're adjusting it even more. Whereas the brackets that most of us are in are the bottom three here. So, like if you were in the 24% tax bracket, now you can make up to 95,000 to be in the 24% tax bracket, whereas it was 89,000 the year before. In the 22% tax bracket, increased by 3,000 basically, and the 12% tax bracket increased by like $725. So, but I mean that's pretty good news overall. And then the 32% tax bracket, if you're in that, the threshold increased, so you could basically you can stay in that marginal bracket longer. And I know tax rates and this kind of material can be very boring. Now, I was going to do another podcast today, but my podcast co-host couldn't join today, and we were actually going to have another channel on, but once again, another channel ghosted us. So I think I almost want to call the podcast the Ghosted YouTubers podcast. Now, the last one looks like I got a new, I don't know if I want to call the person a hater, but I got some pretty challenging comments from the last one because we got into a lot of controversial stuff. And I'm a finance channel. I really didn't want to get into like politics and stuff like that. But if things come up, I'm a straight shooter, so I'm gonna speak my mind. But the commenter that I got, or my newest hater, I don't know if they are a hater or not. They do agree that I know my stuff on finance, so I appreciate them acknowledging that. But for the person commenting, I would speak directly to you. I'd be more than happy to have you on the channel and have a debate, whoever you are. I always try to open up to my fans, my foes, my friends, whoever wants to come on. I like debating, and I do like dissenting opinions. So, when it comes to that, like some of the stuff that the commenter was displeased with was how we talked about, well, he didn't like our opinions on certain things or political conspiracy theories, so to speak. And I won't necessarily get into all of those, but I will say, and let me do this here. Let me end the screen share so you can see my face. Um, so what I will say is, so we were going back and forth in the comment section about free speech and about the First Amendment, and the commenter made a decent observation talking about how, because we were talking about the censorship of big tech companies, which is public knowledge by now. Elon Musk has leaked that out with Twitter. So basically, Twitter, Facebook, Google, parent company, they all basically have censored opinions that are not part of the mainstream, so to speak. And it's not because the commenter said, well, they're private businesses. They can do whatever they want. And I do hear that. That's kind of like a go to opinion. But there's evidence that's been released that shows how, like the FBI and CIA, the government basically, and it's evidence. This isn't hearsay. Elon Musk released this in the Twitter files. Like they were strongly encouraged to not promote certain stories. And the most famous example that I'll go to, the New York Post, which happens to be, and a lot of people don't know this, but the New York Post is one of the oldest newspapers going back to the founding of our country. I believe Alexander Hamilton helped found the New York Post. The story that they broke in 2020 about Hunter Biden's laptop was censored for no reason at all. They didn't even fact check it. They didn't do anything. And basically, what Elon Musk released in the Twitter files is that the people that were running Twitter at the time basically just made up their own BS reasons to censor the story because they didn't want it out. So that's the problem I have. Like, okay, I get it. The First Amendment, I guess, doesn't apply to a private business. But on the other hand, those same private businesses, which you're saying can do what they want, weren't able to do what they wanted during the pandemic. They were forced to shut down. they were forced to make sure that their workers were vaccinated. Like, there's a lot of things that, it's a fine line. It's not exact that, oh, these private businesses can do what they want over here, but these can't. Anyway, this isn't what the video was about at all. I just wanted to address that because I was kind of looking forward to doing the podcast tonight, but that's not going to happen. So anyway, for all my commenters, for all my fans, anyone wants to come on and debate, I'm more than happy to have you on. I try to be as informed as I can with my opinions. I'm not always perfect, but I have no qualms about voicing my opinions. As far as what the video was about, I hope you all enjoyed that. I hope that was beneficial. The 401k, Roth IRA, and the HSA account. Hope you will put that to use. Save as much money as you can. Like, comment, and subscribe. And we're like 3 days away from a new year, so hope 2023 is a lot smoother. And thanks everyone, and take care.